everybody. This is Toni Turner, and welcome to the market now as of Friday, January 29th at about 1:30 p.m. Eastern. Well, U.S. consumer spending fell for a second straight month in December amid renewed business restrictions to slow the spread of COVID-19. The report from the Commerce Department also showed inflation steadily rising last month. On top of that, worries of a short squeeze grew higher today after a host of retail investors continued to trade shares in GameStop and other targeted stocks. The stock skyrocketed in today's session this morning and then started to sell off after brokers, including Robinhood, eased some of the restrictions they had placed on trading. And on that news, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 Spider. The symbol is SPY. Of course, this ETF closely follows our benchmark S&P 500 index. Now, on January 25th, and that's right back here, that candle, that green candle you can see, the SPY made yet another new all-time closing high at $384.39. And we use closing highs here, not intraday highs. So closing high at $384.39, or about $38.43 on the S&P 500 itself. Now, since then, the next day, this little red day you see gapped up, but then closed negatively, and then it's gapped down and started falling since then. Now, since then, it has fallen below the 20-day moving average, the red line that was coming in at $377.92. And today, as I speak, the SPY is falling through the 50-day moving average, and it is trading right now, and the 50 days coming in at $370 and change, and right now the SPY is trading at $369.25, again at about $36.92 on the S&P 500 itself. Now, if we look back up here, we can see price resistance coming in at 386. And then we can see that now, since it's falling below the 20-day moving average, so we have resistance there at about 378 at the 20-day moving average, and now it's below the 50-day. The 50-day is kind of an important moving average. It's watched by many institutional traders, and so we always like our stocks that were long and our indexes to stay above the 50-day moving average. It's considered to be kind of a medium-term trend line, and things are just generally better when the assets we're trading long are above that 50-day moving average, again, which is coming in right now at about $371. So those lines are now going to become resistance. What was support will become resistance when price trades below it in the coming week, of course. Well, no, wait a minute. Let's look here at while we're looking at support, let's look at the October high here. This was up at $354. So that would be potential support as well. Then we have the September lows. I put a blue line here, a trend line. September lows and October lows, that's at 323 and 320. October lows at 326. So that, as you see, and I think we saw this last week, that line here, this trend line here is coming in now right where the 200-day moving average is. The 200-day moving average is considered to be a longer-term kind of a trend line. So we see this price coming together here right around 334, 333, 334. So this is a kind of a coming together of a trend line and a moving average. And we know that whenever indicators come together in a certain point, that can be an important point in this case of potential support. Hopefully it doesn't become resistance if price falls below it. So we've got all kinds of potential excuse me, I don't know what that is. We have all kinds of potential support coming in here should the SPY need to fall here. Now, we have a lot of stocks, as you know, that are really overblown. We have a lot of stocks that simply have gotten too much love and they're trading way, way, way above where they, let's say it's straight, where they actually need to be, certainly considering fundamentals. So we're bound to see a little profit taking here. Markets move up and down. They don't just move straight up or straight down forever. So we've got the coming week is another week of earnings. We've got companies like Alibaba, Alphabet, Amazon, Qualcomm, all announcing. And we still may have this going on with the what we call get shorty trades going on with the, and it may be, you may be one of them, with the day traders moving in to buy stocks that have been shorted heavily by hedge funds, creating what we call a mammoth short squeeze. Please do remember that stocks go straight up, also come straight down, especially in this scenario, and it may be easier to get in than it is to get out. So hopefully you guys all know the risk you're getting into when you trade these stocks like GameStop and Blueberry and so forth. So next week we could see a lot more volatility go on. It's a really smart idea to enter a protective stop with your broker immediately after you enter a trade. And that's whether it's a short-term trade or a long-term trade. Right now, I would say please enter a stop with your broker as soon as you get in. Okay, so let's go on to our next chart here. As usual, we look at a daily chart of the Invesco QQQ, simple QQQ. This is the ETF that closely follows our NASDAQ 100 index, which does have all of the big momentum stocks that lead it, like Apple, like Amazon, like Alphabet, like Facebook. Now, the QQQ made, there it is, made a new intraday or a new all-time closing high, I should say, on January 26th. It might have been this next day, too. They're both by pennies. Whatever day is January 26th, at $328.59. So now that means we're going to call price resistance up here at $330 on the Qs. When I traded, when I captured this chart today, the Qs was trading at $314.41. You can see that in the last week it has fallen through the 20-day moving average, which is now coming in at $317. So that could offer a little more price resistance if the Qs try to get it back above it. It is still above the 50-day moving average. That's coming here at $309 and actually a penny right at the moment. We do have more support down here. Well, we have it right at the 50-day moving average, as well as the two highs created in October and November. So we can draw that trend line right there, coming in at about 298, 299. So our November lows then, and our September low and November low, I've done a trend line right here, and you can see how that was at 267 and 260. So you can see how this trend line is coming up here. So this could present potential support as well, right about 279. So then we've got the 200-day coming in at 271. So all of these potential support here could be of help of holding it up should the Qs finally need to move into a kind of a rest stop here. Certainly, if more fear comes into the market, some of it because of COVID and what's going on, some of it because of the short selling unnerves some people who don't understand short squeezes and so forth. If people just say, oh, the heck with it, I'm getting out, then we could see more downside here in the QQQ in the coming weeks. Why do we care? Because we follow the big indexes, because that's the direction our stocks tend to go. So they can give us an idea of what might happen next and give us added information. So again, keep an eye on the Qs in the coming week, because we may see more volatility. And now, because these are unusual times for this particular space today, we're going to look at a fund we have never looked at before. I do keep it, I do have a position in this fund. It's not an ETF, it's a fund, symbol WEAT. This is the Teucrium Wheat Fund. And again, it's unusual times, so I'm looking at something that's a little unusual for this space. Now, wheat, we'll just call it wheat, could represent a place for you to hang out in the next few weeks or so. The Teucrium Wheat Fund, as you see, it's generally a low-priced vehicle. Now, the fund originated in December of 2011. Of course, that's not on your daily chart here. And if you look at a longer-term chart, you'll see all-time highs were in August of at about, I believe it was about, were in August at about $26. Since then, and that was quite a few years ago, since then it fell from that high up at $26 down to our recent low in June. It fell from those highs way back here a few years ago down to these lows in June here at $4.86. Now, from there, it actually bottomed out and it started moving up in kind of a jagged uptrend. But you know what this represents? This is the price of food going higher. Now if you look at the Teucrium website, you can go to see how it's spelled up here, Teucrium, I'm calling it Teucrium.com. You can see a bunch of different commodities, agricultural commodities funds. And this got up to kind of a wobbly start here, but then the WEAT started moving up in an uptrend. It moved over the 50-day moving average and kept moving up to till it got to $6.10. And you say, well, that's no big deal. It is percentage-wise a very big deal. Then it moved down, broke through the 50. It's just like getting its legs on now. What this also shows you, the price of food is starting to rise, and some of the other ag funds look the same or close to it, and that could be the beginning of inflation. And to me, it looks like something good to trade if you know how to read charts and you don't want to be involved, or at least keep some of your money in the current very volatile market. So let's see, when I captured this chart today, the wheat was trading at $6.28. Now, this fund does not hold stocks. This is not an ETF that holds stocks. It holds wheat futures. Therefore, when you report profits to the IRS, it is taxed as a commodity. It is a commodity, it is wheat, it's an agricultural commodity, and this fund is made up of futures, although you can see it's not terrifically volatile. This is now, when you report the profits that you make, hopefully profits, it is taxed as a commodity by the IRS. Now, this is actually a positive method of taxing. I'm not going to explain it here, but your CPA or whomever makes out your taxes will have to know how to calculate it if you do buy into this stock in a traditional account. Now, the alternative is to trade the wheat in a tax advantage fund like an IRA, where the profits won't matter to the IRS. So, with that news, let's go back to wheat here. Now, please know that agricultural commodities, they trade on their own. They don't follow the SPY, and certainly they don't follow the QQQ. So ag commodities trade on their own according to supply and demand. And that's a good thing right now. Next, what I want you to do with me here is look at the volume and how it's changed. Look left on your chart down to, say, this June area here where the lows were. You can even look back a little bit, April, May. You can see how low the volume was here, but then train your eyes to slowly look right and note how volume is coming into the WEAT. Look at it pop up here. Look at the volume get just a little bit higher and a little bit higher and a little bit higher. That shows you interest is coming into the wheat, the WEAT, maybe for the first time in about 10 years. So that tells me that the added volume is added interest, possibly funds and certainly retail traders looking at it and saying, hey, this may be a place to hang out, especially as it shows what I just told you at the beginning of this session, that inflation is starting to move in. That means the price of food is going to start sadly moving higher. Sadly, because we have to go to the grocery store. So with all that said, we can see how the wheat moved up, fell back down through the 50 and 20, then moved back up and made this little pattern. Now you're going to say, Toni, can you not see that little head and shoulders there? Yes, I certainly can. I can also tell you that it may or may not play out depending on what happens. We all know that. Sometimes head and shoulders in the right place will be a continuation pattern. So because today's price started moving up again, I'll keep an eye on this and we'll play it accordingly. So if in the coming week, and look at the 50-day moving average down here at 602, in the coming week, if the Tecrium Wheat Fund wheat remains above this $6.10 level here, certainly above the 50-day moving average, if it can do that in the coming week, I will add shares of the wheat fund to my portfolio. I will keep an eye on it right here. And if in the coming week or so it can move above $6.40, that resistance line, I will add more shares to my position. I will put my initial stop down here at $5.90. And if it keeps moving higher, I will certainly turn my stop into a trailing stop. So you may want to keep an eye on wheat in the coming week. And now, if you'd like to go on to become a more successful trader, this is a great time to check out my trader training programs. You will love my powerful strategies devoted to swing trading, trend trading, bottom fishing, and more. My programs are easy to understand and they can help you increase your gains quickly and easily. To see all of my online trading programs, simply go to the link on this screen or click on the orange button below. And now on for final thoughts. Ask yourself this question: does my trading style suit my lifestyle? Does my trading style suit my lifestyle? Now, when it comes to time devoted to trading, the first thing you need to consider is whether or not you want to become a part-time or a full-time trader. Now, that choice relates directly to your financial goals. Are you looking for added income to other established income? I mean, possibly you have a job right now totally outside of the market, or possibly you're retired and you have a little more time to sit at your desk and look at the market. Then you may find being a part-time trader is right for you. Now, while you do need to study the market, that's something that I believe some people are kind of avoiding lately, but they shouldn't be. While you do need to study the market and your target stocks, once you've entered your positions and then your stops, put in your protective stops, and then you can even with your broker enter stops for profit targets. You can say, if my stock goes from $10 to $15 or $10 to $12, take me out at $12. So you can leave your positions on autopilot once you've gotten into them. So you can do that as a part-time trader. And the style I'm talking about trading here is swing trading, which can be 3 to 5 days or even a little longer, or trend trading, where you simply say, I will get into this particular stock or ETF, and as long as it trades in an uptrend and you'll have some kind of indicator like a moving average to give you a guideline, then I will remain in this trade. And if it doesn't do what I think, or if it moves below my indicator, then I'll get out. And of course, my trading programs have trend trading training in them. You can also day trade part-time by trading the first hour or first 90 minutes of the trading day and maybe the last hour of the day. Those are the typical time slots that offer the most bang for the buck for day trading. Now, full-time traders devote 4 to 5 days of the trading week to the market and executing trades. Now, goals-wise, they may intend to support themselves entirely by trading profits. They may execute day trades, swing, or trend trades, or a combination of these styles. Full-time traders, please, please, please. Full-time traders need to realize before they start and give up their day jobs that trading profits are usually inconsistent, meaning some weeks or months these traders will do well depending on experience and discipline, and some time periods may not be profitable. That's just the way it is. And by the way, no trader is immune to losing periods. Novice traders would be well to dedicate a substantial period of time learning the craft. Please do that. Study the markets, study the charts, learn a little bit about fundamentals, and then use a sim account or a paper trading account, and make sure you're profitable on a consistent basis, certainly before leaving your day job or a job in another non-market area. Trading for a living is not easy, and the burn and churn rate is high. Please know that. I'm not trying to discourage anyone, but the last few days in this market, I think that many traders think that trading is a walk in the park, and I can tell you from experience that is certainly not always true. Now, while there are traders both part-time and full-time who do very well most of the time, make sure that for you, the trading lifestyle and your style of trading supports your personal goals for your life. Okay? So finally, if you'd like to become a more successful trader, check out my trader training programs. To see of all of my online training programs, simply go again to the link on this screen, or again, simply click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.